Well, how do you read those expectations and then turn it to your advantage? That's what this presentation is about. To read the market expectations, you need to track the following data. And I've done my fair share of tracking each one of these over the years and trying to formulate a way of seeing this, because honestly, you're looking for price action, trend conditions, strength of buyers and sellers, and how do you look for that? Now, I'm not talking about putting 27 indicators like I was doing on your chart, thinking that when all these indicators line up, that must be good. More times than not, you got indicators going every which way, and you're more confused than you were without them. Okay? And so we have strength of buyers versus sellers, and then changes in momentum. And when you start really peeling back the layers of the onion, and you're rolling up your sleeves, and you're studying each one of these aspects of the market, it gets quite tedious. It gets tough. I'm not kidding. This is hard stuff. Because oftentimes as retail traders, we're not the ones who get all the data immediately. The big boys, the big institutions get that data immediately, and they get different aspects and different conditions of the market showing to them, and sometimes they're the ones making those conditions occur in the marketplace. And we're almost, I would say at times, the last to know. It can be quite tough, but it can be done, and I've done it. Let me share with you what I'm talking about. In summary, you need to see market sentiment. One of my mentors years ago said, Dean, you need to focus on market sentiment. Because when price action or price and market sentiment are aligned, moving together, you have a higher probable trade. If they're not moving together, then you're going to look for signs of a shift in expectations, a shift in the change in momentum, a shift in price action eventually. So what we're really looking at here is market sentiment. And years ago when I started, when this mentor of mine was talking about market, there wasn't a tool out there. I was like, okay, I'll just go look for market sentiment. There's not specifically a tool for that. So there's no existing tool that could pull and consolidate all this information for me. So a good friend of mine said, Dean, if you can't find it, make it. Make it do what you want to do. Make it take all that information, price action, trend direction, strength and weakness of buyers and sellers, and changes in momentum, and create it. Make it. So you can see the market the way you need to see the market. So what I'm about to show you is the culmination of years of development, testing, and trading in order to see market sentiment. And the data I'm about to show you looks like this. Let me pull it up here. This is an indicator that sits below price, and it's my one and only indicator that I use, below price, because it is showing me market sentiment. So let me break it down for you and go through it a little bit with you. The green line represents current price sentiment. It's the current market conditions and how the market is moving related to positive and negative expectations. The red line is simply a crossover of the green line, and it's letting me know when to enter and when to exit the market related to price. The yellow line is what I refer to as the overall market sentiment. This is the overall direction of the market. And the overall market has a tendency to do two things. One, turn slowly. The overall market doesn't make immediate moves. Number two, overall market sentiment will continue going in a direction because it's so big and so large and doesn't turn too quickly. It's got to come to a gradual end and then turn. But when it turns, oh my goodness, great opportunities are available for you. And then the blue lines, two blue lines, one above and one below, excuse me, these represent volatility in the market, increasing and decreasing volatility. Now let me take you back a moment. Do you remember what I said earlier about buyers are buying or the sellers are selling? And I didn't want to be the last buyer buying, nor do I want to be the last seller selling. What I'm going to be looking for in the blue lines with increased volatility is I want to know when the market, excuse me, when the market is stepping on the gas. That's the way I put it. When we have an acceleration in volatility and rate of change in price, that tells me that the buyers are buying or the sellers are selling. I'm going to give you evidence of that here in a moment. So I'm looking at the blue line to give me something specific that I can see when the market's stepping on the gas. Because when the market's stepping on the gas, just like you, let's say you're trying to get onto the highway, or you're getting onto a highway from the frontage road. Do you accelerate or decelerate getting on the highway? I know, stupid question. Rhetorical, I know. But we're stepping on the gas. We want to get up to speed as we get onto the freeway. Well, if that's happening in the market and we have positive expectations, then that tells me that buyers are buying. Okay? So I'm taking price sentiment, current price sentiment, overall market sentiment, looking for times to enter or exit the market with increasing or decreasing volatility all in one nutshell. And this didn't take just overnight. This took years of development for me to hone all this in and define what it's doing as I'm watching it. And again, what I'm looking for here is, does price and market sentiment align? Are they sharing the same sort of look, the same sort of aspects, same sort of expectations matching price to tell me to enter the market? So as we look at this a little bit closer in, let me show you something here. There's levels here. There's the 68 level. There's the 50 level and the 32 level. And these are important because I did a 20-year study of price. And over 20 years of price study, I found that price had a tendency to reach certain levels that we call, some would refer to as overbought, oversold. I refer to as buying exhaustion and selling exhaustion. And there's a tendency for the market to wane, to fade, to slow down. That momentum slows down. And so we look for these. And then at the 68 being an overbought, or the buying exhaustion, we look for this when the market gets down around the 32 level. We start looking for these turns in the marketplace. So we're actually able, in some instances, to identify market reversals before they occur. And then the 50 level, that's an important one, because that one is a determinant for me based upon positive sentiment and negative sentiment in the marketplace. So let me delve a little bit closer in to this. The green line being current price sentiment, I'm looking to identify positive and negative sentiment. If I'm above the 50 line, I'm in positive sentiment. That's telling me that buyers are buying. When I'm below the 50 line, that's negative sentiment. That's telling me that sellers are selling. Okay? So if I see that green line going down and other components of market sentiment are sharing the same with me, then you know what? It really, it's no longer a 50-50 proposition for me to trade. You think about it, 50-50, do I go long or do I go short? Well, if the green line's going down, and the other components of market sentiment are in alignment with the green line going down, then I'm not even thinking about going long. It's not even a part of my thought process. All I've got to do now is determine the appropriate place to go short, if there's still a short potential. Then I talked about a moment ago about the 68 line and the 32 line being buying exhaustion above, or selling exhaustion below. And the expectation is, when we start getting up into those levels, to start looking for market reversals. It can't go any higher. It doesn't seem like it's going to go any higher. It may test higher, but I'm going to be looking for certain aspects of market sentiment to tell me it's done moving higher. Okay? So I'm going to be looking for this. Also, I need to identify when to get in and when to get out. And look at this. If you take a look at this, you can see here, as I want to show you this, I mean, just take this move to the upside here. This is beautiful. You see the green line is way down low. Okay, do you see where my cursor's at? It's way down low. And so as the green line's turning back over, we're into oversold selling exhaustion. Now, what do I mean by selling exhaustion or buying exhaustion? I think of a runner. As a distance runner, I know that I can't just run straight up a mountain. I got to go up and take a rest. I'm worn out. I got to take a rest. I got to get some water, something to rejuvenate me, and then I'll run up some more. And I go through that process of going up and kind of easing a bit, and going up and then easing a bit until I've achieved the top of the mountain, the top of the hill that I'm running. Well, the same thing applies here. You're only going to get so high. But as you go up, you're going to take rest along the way. So I'm here at the low part, okay, about to run up the mountain. So I cross over the red line, green line over the red line, going to the upside. There's a entry indication right there. And as I start moving to the upside, I start to go, I can't go anymore. I got to take a rest. But I'm holding above the red. So this is telling me that current price sentiment is still going up, just in a resting stage. Have you ever, let me put it this way, have you ever gotten out of a trade and wished you stayed in? You're looking at it right here. Getting out of a trade right here, and look what it does. It literally bounces off the red line and takes a move up. Had you followed this, you would have known there was a potential to stay in the trade and follow it on up. And I'm not looking at price right now, but I'm just giving you some information here, being able to identify entry and exits. Just looking at market sentiment. Then there's the overall market, and I refer to this as the market baseline. Now, the market baseline is, like I said, the overall market direction. It's a consensus of all those in the marketplace. If you took an aggregate, an average of all the players in the marketplace, what direction are they going, long or short? And are they still going long? Are they still going short? So take a look at this. As you can see, the yellow line starts rolling over right here. And so as the overall market's rolling over, where my cursor's at, you can see it right there, the market starts pulling back up. The current price sentiment, the current market starts pulling back up. Again, it bounces off the red, and we're back down. So again, I've got current price sentiment trying to pull back a little bit. And this pullback right here could be just because of some profit taking. That's often occurs. You're up 20 pips, you may want to take some of that. Now then, the market rolls back over, and this is beautiful. I love when I see this. When the green line, current price sentiment in the marketplace, and the overall market sentiment are going in the same direction. It's beautiful. It's absolutely gorgeous. You know what this reminds me of? This kind of reminds me of, you ever seen those pictures of how you got an ocean liner or a ship, and then you have the dolphins right out in front, right out in front of the ship. They're just kind of up and down, catching the momentum of the ship. Well, I'm catching the momentum of the overall trend, and I'm just riding it. And where am I going to ride it to? I'm going to ride it down into some selling exhaustion. Then the market's going to pick back up. Now, in this case, the overall market's coming to the downside. In this case, the market's kind of pushing up. This could, again, be profit taking. But look what happens here. Remember when I said there's one of those components of the overall market that's going to say, I'm still going this way. I'm so big and so heavy, I ain't done going this way yet. It doesn't turn real quick. Think of a big ocean liner. It doesn't turn real rapidly. A big diesel engine with 100 cars behind it doesn't stop on a dime. It's going to keep on moving. So what happens is we have positive expectations coming in on the current market, but the overall market expectations are still negative, still weak. There's weak demand overall, even though the current market is coming back to the upside. And what happens? Current positive expectations, current demand, strong demand that's going on right here can't overcome the overall market, and we turn and we shift again. When I identify this in the marketplace, I can take some profit on my shorts, and I can actually then re-enter a short, seeing the market make another move back down. But that's the overall market sentiment. And more times than not, if I'm trading the direction of the overall market sentiment, it ends up being a great trade because we have current sentiment and overall sentiment going in the same direction. Now, what did I say earlier about market reversals? Something I've noticed on some certain time frames when it comes to the market baseline. This is gorgeous. The market baseline, when it gets up into an oversold or buying exhaustion area above the 68 or below the 32, we start looking for turns. Now, these turns may take some time. The supply in the marketplace may not have fully, exhausted itself and demand to turn it, but it's winding down and winding down. And look at this. This is gorgeous. So we get up here and we just wait for it. We wait for the overall market to make its turn, and then we get this move back down. We'll wait for it again. So these are things that I look for when I trade. I'll go out, look at certain time frames that show the market baseline at these levels, and all I have to do is sit and wait for the proper setup. Now, if it's still rising, as it's into this area, I'll go down to a smaller time frame. But there's certain things to look for here to identify market reversals. Just this one idea right here, this one thing I'm sharing with you, could literally make a complete change in your trading. Being able to identify a market reversal before the reversal occurs. Last but not least, the blue lines. These are my volatility band lines. Okay? And so when the lines are diverging, moving away from one another, that's when the market's stepping on the gas. And like I said, when I'm entering on the freeway, I want to be stepping on the gas. And when I see I see those blue lines start to move apart from one another, having pressed down, you can look right over here. See how the market pressed down right here? Stayed pressed down, then started opening up, and then we start seeing some movement, and then the movement really kicks in, and they even go wider. The market's still putting on the gas. Okay? And there's going to be times where the market's going to come off the gas, decreasing volatility. And when I see decreasing volatility, that's telling me time to get out. Time to start taking my profit off the table. If the trade's not working out, let's close her down. It's just not working out. And when I see increasing volatility, that's telling me hang in there or add more to my trade. And there's going to be ways, there's actually, in this snapshot, there is a great place to add to your trade. It's sitting right there in front of you. It's one of the things you're going to learn about how to read market sentiment. It's beautiful. It's sitting right there in front of you. Exactly where to add to a position. So that's market sentiment.